Have you ever looked at your paycheck and wondered where all your hard-earned money really goes? It's not just about the numbers you see. There's a hidden financial system at play. A complex web of taxes, debt, and inflation that quietly shapes our economic reality. Today, we're pulling back the curtain to reveal the 5 financial secrets that determine your wealth. This isn't a conspiracy theory. It's the real story of money. First, let's talk about income tax. It seems straightforward, right? You earn money, you pay a percentage to the government, but the system is designed with intricate loopholes and deductions. While the average person pays their share directly from their salary, the ultra-wealthy can leverage sophisticated strategies, investments, and business structures to legally lower their effective tax rate. This creates a fundamental imbalance where the tax burden doesn't always fall where you'd expect. Secret number 2 is inflation, the silent tax. When your government prints more money, the value of each dollar you hold decreases. Your savings buy less. Your salary has less purchasing power. It's a tax you pay without ever seeing a bill. While official inflation rates are reported, the real-world impact on essentials like housing, food, and energy is often much higher. This erodes the wealth of savers and wage earners, acting as a stealthy transfer of purchasing power. The third secret is the nature of debt. We're often told that debt is bad, but for the wealthy and for governments, it's a powerful tool. When you deposit money in a bank, the bank can lend out a multiple of that amount, creating new money out of thin air. This system, known as fractional reserve banking, fuels economic growth but also concentrates wealth. Those who can borrow cheaply and invest wisely can multiply their fortunes, while those who take on high-interest consumer debt find themselves trapped in a cycle that drains their wealth. Debt isn't just a loan. It's a mechanism for wealth transfer. Next, we have corporate taxes. You might hear about high corporate tax rates and assume large companies are paying a huge share. But the reality is different. Multinational corporations are masters of global tax arbitrage. They can shift profits to low-tax jurisdictions, use complex legal structures, and take advantage of incentives to pay very little tax in the countries where they make most of their money. This means the burden shifts back onto small businesses and individual taxpayers who don't have access to these global strategies. This brings us to our final point: the squeeze on the middle class. When you combine regressive consumption taxes, the hidden tax of inflation, and the system where corporations and the super-rich can legally minimize their contributions, who is left to foot the bill? The working middle class. They earn too much to qualify for significant government assistance, but not enough to access the sophisticated financial tools of the wealthy. They become the primary engine funding the system, bearing a disproportionate share of the true tax burden. So what's the takeaway? This isn't about blame, it's about understanding. The financial system isn't necessarily broken. It's working exactly as it was designed. By understanding these secrets, the nuances of income tax, the silent erosion of inflation, the power of debt, the realities of corporate tax, and the pressure on the middle class, you can start to make smarter decisions. Financial literacy is your best defense. It empowers you to navigate this complex world, protect your wealth, and work towards true financial independence. Thanks for watching. If this opened your eyes, be sure to like, subscribe, and hit the notification bell for more deep dives into the systems that shape our world.